What is going on, everybody? And welcome to Thursday's coaching hour. Ask
Happy to be
us
here.
anything. Today, we've got yours truly, Joe Nadeau, and
What's up, everybody? I'm Jesse.
yeah, we've got Jesse, and right underneath us in the feed, we've got Sean King. Sean, how are things down in Florida?
Sunshine, beautiful, loving it, man.
Hey, I definitely remember a coaching call way back when you were talking about some snow in Florida. That was within the last 6 months, yeah?
Yep. Don't expect me to be doing that again anytime soon. I think it was about 70 years since something like that had happened. So
Crazy.
Wow.
We'll see.
I love it. Okay, we are getting all set up on YouTube, live there on YouTube, on Facebook, live there, and on Instagram. All of those channels are the Banking Bros, is where you can find us. But what we would prefer is if you are tuning in, or as you are tuning in, leave us a comment. Let us know where you are watching from, and that way we know how far we're reaching and who we're talking to and that sort of thing. This call is supposed to be interactive. We are supposed to go back and forth with you. Talk about real things, real finance, talk about things that are happening in life. We've got some fun things planned, or I've got some fun things planned for this hour. I've got a couple of videos I'm going to show you both that I think are going to be fun and funny because of the content that's in them. So I'm excited to do that. But while the reason that we are having this call in the first place, the reason that we're here is because we want to talk and walk you through the infinite banking concept. Jesse, why don't you give the people a little bit of a rundown on what that is in your own words, break it down, give it to them right, nice and easy. Tell them what it is.
Sure. I see you, Ryan, from Los Angeles. So I'll talk to you since you're commenting. Appreciate you being here. So the infinite banking concept is for you to actually make personal finance. You're the one that controls it. You're the one that has all the advantages of it. And that's just not the conventional route. So you probably already know that most people don't keep most of the money that they make. So we're teaching people how to save and spend money at the same time, which means you're going to get multiple uses out of your dollars, with the end result being that you actually keep the money.
That's it. That's exactly right. So if you're tuning in, again, we are live on YouTube, we are live on Facebook, we are live on Instagram. But if you are tuning in, would you please let us know where you are tuning in from so we can say hi to you and give you a nice shout out. So over there in LA at the moment, it is not noon. It's 9 a.m.
Right.
So Ryan is waking up with us a little bit, maybe drinking some coffee.
I love it. I
something
would
like
be
that. At 9 a.m. Is that early for you, Jesse?
No, it's not, but I'd be drinking coffee. I was
Okay.
saying definitely on the coffee part for me.
I got you. So anyway, we are excited to walk and talk you through the infinite banking concept. We do that all the time here at our channel and all around the U.S. Sometimes we're live and in person. Sometimes we are virtual. Sometimes we've got group events. Sometimes we do one-on-ones. But that's what we do. We walk and talk people through the infinite banking concept. Stevie's got a big shout out. Sean, that's for you, man. Stevie's in Florida.
Let's go.
Stevie, what part of Florida are you in, man? Sean, you're Pensacola, is that right?
Pensacola, call that Lower Alabama.
Yeah,
Lower
Alabama. I got to get down. I don't get to Pensacola much, man. It's in the corner. So
it's beautiful, man. It's beautiful. Got the best.
I normally go the other directions and things
Melbourne.
like that.
Okay.
Melbourne, Florida. I do not know where that is. Do you?
Australia, that's right.
That's exactly what jumped into my mind. I was thinking Australia.
Melbourne,
very
Australia.
South Florida, right? Very south.
Yeah,
I love it. Okay, so here's what I'm thinking, fellas. Let's have some fun. Let's kick it off right on the bat and let's have some fun. I want to play one of these videos for you because I found this video online.
Okay.
It's a personal finance style of video. Okay, everybody? So I'm going to play the video for you. I want your initial thoughts, feedbacks, and reactions. They're saying, hey, Melbourne's where SpaceX is, though.
Okay.
Hey, Stevie, is that where those ladies went up into space that people are saying they didn't really go up into space? Did you see that, Jesse?
I have not seen about this.
Did you see that? Okay, so yesterday, Navigate Your Ventures from Colorado, we appreciate you. Yesterday, a bunch of ladies like Gayle King, Oprah's best friend, Katy Perry, the singer, some other people, Jeff Bezos, I think, was on this thing. They went to space and came back all in the same day, I believe. Sean, correct me if I'm getting this wrong. I think Monday they went to space and came back. They were getting off the aircraft, kissing the ground, so excited. And people were like, where are your spacesuits? Where are your helmets? How'd you get there and back so quickly? What? And so people are getting a hard time on the internet.
What an exciting time we're living in.
Hard time on the internet. Like, there's no way you possibly would. And apparently, it costs $28 million to get on this this aircraft and to take them.
None of that money probably ran through a policy first. They probably just gave it to them, and they're just like, "You have it,
one and done."
Right. 28 million to spin the block real quick. Did not go to space. No shit. Okay, so anyway, guys, I'm gonna play this video. I think we're gonna enjoy this. Let's get it.
Sir, Miss Cheyenne came out and got this 2021 Ford Escape. Miss Cheyenne, how much did you put down?
$1,000.
All right, how much was your monthly payment?
$389.
Okay. How long are you financing for?
267 months.
All right, congratulations, okay?
Did you catch it? Do I need to play it again? $1,000 down.
Mm-hmm.
Payment 200 and some change.
Yeah, I was trying to do the math on the whole, how many months
389.
in the years.
389, apologies, 389 and 267 months of financing.
How many years is that? I'm a calculator guy. I'm just telling you, I'm a calculator.
I saw
guy.
this video on the internet. Now, believe you me, I immediately ran to the comments. Immediately. And people were saying exactly what Navigate Your Ventures is currently saying. 267 months, crying, laughing face emoji. There's some very funny comments out there, but I thought that what a good topic for us to jump off on a personal finance. You can ask us anything you want, virtual, call here, right?
Yes.
So, okay. So what are your initial thoughts? Initial thoughts on this video that's circulating the internet?
What kind of car did she just get it for $100 grand?
It was 2021, so 4 years old, Ford Escape.
Hey, I don't know many Ford Escapes that cost $100 grand, 6 figures, but that must have been a nice one.
So talk us through how we got to 6 figures. 300 and change a month.
Yeah,
267 months.
389 is what she's paying for 267 months. Gives you 100. Oh wait, no, I didn't add the extra 1,000 she put down. So $104,863.
But we didn't add any interest either.
I didn't add any interest. No.
Gotta have interest. Gotta have interest on that.
Over the 22, because I did go to my calculator, over the 22.25 years that she's going to be paying.
Right. For that 4-year-old Ford Escape. Okay, so I went to the comments. One of the comments said, "That's not a Ford Escape. That's a Ford can't escape." And I thought, oh my goodness, this is hilarious, right? Oh my goodness. Okay, so again, personal finance here. This lady was pretty happy. I mean, the video ends with the guy saying, "Congratulations."
Right.
Yeah, we're very happy we got you in the car. Well, give us some thoughts, Jesse.
My pervading thoughts are, everybody walks in on finance looking for the payment, I think, more than anything else. And what we are realistically seeing creep into, say, auto purchases is lengthier time frames of people paying on vehicles. It used to be more like 4 years, then definitely moved to 5 years, definitely to 6 years. Now it's typical. And even when, let's say, people were conventionally financing things for just 4 years instead of 5 or 6 or longer, most trade-ins still had payments on them. You understand what I'm saying? So people were already rolling debt on top of new debt, right? But now the time frames are just getting longer as well. So again, there's a lot of personal finance issues going on right here. And I think that most people are just willing to accept if they can get a good payment that works for them in their budget now. They're not worried about or not even aware perhaps of, what that actually translates to money out of their lives forever.
That's exactly correct. I think we got to watch it one more time. I think it deserves the play one more time. Here we go.
Sir, Miss Cheyenne came out and got this 2021 Ford Escape. Miss Cheyenne, how much did you put down?
$1,000.
All right, how much was your monthly payment?
$389.
Okay. How long are you financing for?
267 months.
All right, congratulations, okay?
Congratulations, okay?
Now I can't hear the whole Ford can't escape part.
Ford can't escape, right? One of the other comments on this video said, "Baby girl, if Johnny had 7 apples, ... right? Delivering that, you got to get out here and do just exactly what Ryan said. So sad people can't do everyday math, right? And it is sad, but there again, the reason that I play the video in the first place is because we're on this channel talking about personal finance. That's what we do here. There are videos that circulate the internet. You've probably seen them. You've got the street interview type people
Sure.
who walk up and they say, what do you do for a living? How much do you make? Or how much is your rent? Or how much is the car you're driving? Right. You've got this type of video where this is a car salesman. Car salesmen make lots of videos these days. I've seen a bunch of them where they're promoting that they sell cars, or they're saying, come down here and check out the cars or whatever. And this car salesman is saying, oh, we got you in the car that you were interested in. Be happy. Tell the people how we did it.
Got you a reasonable down payment where we could get something going for you. Got you to a reasonable, what you feel like for you is a premium payment to make the sale.
That's it. And so that's the same thing that we are trying to do on the internet. Also, we're trying to make videos and content that promote saving, SAVE, save, keep, KEEP, or putting your money in a place where you don't actually lose access to it.
Yep.
You don't lose access to it. You don't lose liquidity. You don't lose your privacy. You don't lose all of these things. And I think that's so important because we can watch these videos and they're funny. We get to laugh and we get to have a good time and poke fun at them, right? But
we do.
But the reality is that's why we're doing what we're doing. So we can encourage people there is a better way to do this stuff.
That's why we're doing what we're doing, because that's a real life case where people in school, at home, from peers, from their employer, they're not taught to look at these types of things.
That's it. That's exactly it. If you are just, go ahead, man.
Doesn't Nelson mention this specific thing in his book? It's not about rate. It's about volume.
That is correct.
Everybody is always so focused on rate when volume is what kills you. That's why you look at a home mortgage and you're like, cool, I just paid for 2 homes at the end of this 30 years because I was focused on getting that 4.5%, 5%, whatever it is.
Yep.
But I wasn't thinking about the volume of interest, the time period of interest that I was paying for. So 267 months gonna get you, but that's what people are doing with their homes.
That's exactly correct. It's almost the exact same thing. So here's here's an analogy that I've used sometimes when people talk about rate or volume. You might like this, Sean. Okay, imagine you're at the doctor's office and the doctor's gonna shoot you with the medicine that you need, or the penicillin to fight the infection or whatever. They put it in the vial, right? It's not the rate at which they give it to you, fast or slow. It's the volume of how much they give you.
Mm-hmm.
Does that make sense?
Yeah.
They give you too much, deadly. They give you too little, doesn't work at all. It's the volume. It's not the rate. It's the volume. And people get so fixated on the rate. My rate on my car is 1%. Can't beat that. My rate on my house is 3, 4, 5%. Can't beat that. But it's not the rate. It's the volume of interest that people are losing. And that's what we want to teach you how to do here on this channel. Keep it. Keep it. Stop giving it to the third parties, to the banks, to the credit unions, to the financees, to the finance companies, whoever it is. Keep it. And that's what we teach people to do. So, Sean, for all the people who are just joining us, we got a couple people live on YouTube. We got a couple people live on Instagram, Facebook. Why don't you walk and talk to people through your explanation, 30 seconds, 1 minute, of what the infinite banking concept is and how it can help them?
Yeah, so the infinite banking concept, as taught out of Nelson Nash's book, Becoming Your Own Banker, this is what we follow because this is the Bible of infinite banking, is simply teaching you to take back control of your money. Banking is already going on in your life. It's just a function of your life that you don't control. So there's constantly flowing money that goes out of your hands that you're making that you're actually never able to take advantage of capitalizing on. Again, we teach people to add one step to their system, where to send their money first, where to now warehouse their wealth, where they can make sure that they're earning on the money for the rest of their life while still being able to use the money to finance their life's purchases. So save and spend at the same time, the save and spend system.
I love that you talked about that control aspect. I think about that car example and who controls the collateral in that relationship.
Yep.
Whoever financed it, the bank does, right? Like who controlled, hey, what down payment are you going to give us? They're going to tell you that number, right? Who controls, that rate? Who controls what that payment is? It's like we've given up that control.
That's
Yep.
exactly correct. Okay, so Ryan's got a question for you, Sean. He's got a question for you too, Jesse.
Come on,
You can
Ryan.
if you can reach behind us.
Oh,
He's
yeah, the
saying,
title, yeah.
what is the title of that book? Ryan, that book is named Becoming Your Own Banker. We've got a few copies here. Sean's got his. We've got ours here. Sean, if you hold up the top, hold up the bottom so he knows who the author is. The author there is R. Nelson Nash. Rest his soul, passed away just a few years ago. But that book is available on Amazon.
Mhm.
It, I believe, runs about $20 or $21 or something on Amazon when it's all said and done. And you can get a link to that book real easy if you go to the website and just type it in. Or, of course, you can click the link in our bio. You can find that wherever we are. Instagram, YouTube, Facebook, wherever you're at. And you can click the link in our bio and you can grab a link out of there and get a copy. You are welcome, sir. You are welcome. Oh, okay. We've got a good comment from Ryan, actually.
I see that.
We might need to talk about this one. So Ryan says he's trying to increase his credit score to qualify for a HELOC, a home equity line of credit. Now, Sean just posted something in our private Facebook group about a HELOC. So I'm going to let you have the floor first, and then Jesse and I will jump in, chatting with Ryan a little bit about what he's trying to do.
Yeah. So prime example here. I need to increase my credit score so I can qualify for a HELOC. They're constantly going to make you jump through hoops to try and qualify these things so where you can access your money. That's not what we're doing here. So again, it's all about control. They have the control. You want the cash. They're going to make you jump through the hoops to get it. So I just recently, my wife and I got qualified for a first lien HELOC. There's a big difference out there between first lien and second lien. I highly suggest going and checking out the YouTube video on my page that I just posted, Legacy Life. It explains the differences between those. But really, it seems like what you're doing, Ryan, is you're trying to get access to the cash that's in your 2x4s in your home, because that's one of the things that we like to help people utilize here. Infinite banking, again, is really just the foundation. But next, it's like, hey, where can I get access to more capital? Where do I have money that's not working for me, lazy money that could be out making me money? So again, I think you're doing the right thing. If you don't already have an infinite banking style policy, I think you should look into doing that. That could definitely help with a lot of stuff that you're looking to do with the HELOC. But I think you're lock and step right there with kind of putting those two things in tandem. And again, I kind of talk about that in my video. And I have Jason from First Savings Bank break that all down. And I actually show an example of how to best use your HELOC and, again, how to help pay down that house so you can be utilizing that equity elsewhere.
Love it. I was going to share a comment, but I think he covered it, man.
Yeah.
What do you think?
I mean, what I would say is my personal experience has been, I started out doing everything conventionally financed, meaning when I showed up and learned about infinite banking, I had student loans in debt. I had credit cards that I owed on. I had the family car finance, just like we were showing a moment ago. And then I swung the pendulum in the exact opposite direction, where I learned about financial independence and freedom through infinite banking, where it doesn't matter what your credit score is. And it doesn't matter whether you have, just a lot of conventional things going on. And then now I'm somewhere in the middle, to where my foundation, to use Sean's wording there, is our private banking system, where we have all the control, where we have uninhibited access to capital, et cetera. There's also nothing wrong, Ryan, with playing the game. There's nothing wrong with playing the game. Improve your credit score if you can improve your credit score. Make lines of access to capital where it's inefficient, like Sean was talking about. You could be doing both of those at the same time. Absolutely.
Yeah, I love it. Okay, folks, I think it would be a good time to transition to a little bit of chit chat that we had inside of our Facebook group earlier this week. All right, so earlier in the week, I posted this question, and we got a little bit of feedback. I want to talk about it here. So the question that I posted was, are you a learn by doing kind of person? Like, I'll just get started and I'll learn as I go. Or are you a wait until I know everything kind of person?
Right.
Like, okay, it's fine. Yeah, I get that everybody's doing it now, but I'd rather be a little bit behind or start tomorrow or something like that, because then I'll make sure I get it right.
These questions are always so neat to me.
Right.
Yeah.
And I want your feedback on that before we go into the comments and see what our Facebook audience was thinking. Jesse, why don't you start?
Yeah. Normally when I'm exposed to something and it connects with me, I, for say 10 years or so now, have certainly adopted the habit of making some first move in that continued direction. If I'm inspired in some way, I'll attribute part of this to, say, Jim Rohn. Jim Rohn says, if somebody mentions a good book to you, go get the book. Go to your public library and go get that book, right? So I always try and make at least one more step, cognizant and intentionally moving in that direction to pursue that further.
I love it. Sean, what about you? You go ahead.
I'm 100% learn as I go. So specifically with infinite banking, a lot of things, but specifically with infinite banking, I had come from the insurance world. So I knew the inner workings of insurance. So when I saw this specifically, I'm like, I get how insurance works. Death benefit. Some of them sometimes have access to cash value. There's guarantees. There's contracts with the company. If this is what they say it is, I will figure the rest out.
Yep.
And again, when I read the book, I realized that on the book cover, it says infinite. How am I going to learn everything about a concept that is infinite? I'm not. So I knew right then, all right, well, if I just dedicate some time, energy, and effort to continuously learning about the concept as I go, I mean, I could take 5 years, 10 years and be learning about it and not know everything. And then, damn, I just lost 5, 10 years of capitalizing my system. So I'm going to jump in both feet, make sure I do it with people that I trust, that can coach me, guide me through. But I'm going to put the time, energy, and effort in so I can get started now and then, deal with the rest of that later.
Exactly. I think that when I pose this question, right, are you a learn by doing kind of person, or are you a learn as you go kind of person,
Mm-hmm.
right? Sorry, learn by doing kind of person, or wait till I know and then I'll do kind of person. I think that I am somewhere in the middle.
Okay, I was going to say, I couldn't remember if I had seen your comment, so let's get it.
No, a couple of people in our comments also listed that same sentiment, that they're somewhere in the middle. I think I'm somewhere in the middle.
Okay.
I think that I like to know a little bit. I got to know some basics before I do it. But once I get started, I'm very willing to learn the rest of it. But it's interesting to me. I actually sat down with somebody a few months ago, maybe, to chat with them about the infinite banking concept. They had a bunch of questions, and they actually asked me this question. I never heard it posed to me this way, and I've adopted it. I've used it lots since.
Okay.
They asked me this question because they were asking lots of questions about infinite banking. How do I do it, and how does it work, and this and that and the other. And then they posed this question to me, and they said, "Hey, Jonah, are you a learn? Or do you acquire knowledge? Do you learn with the intention of applying, or do you learn just to learn? Do you like learning?"
Okay.
And I realized when they asked me, oh, I only learn with the intention of applying. I actually do not like,
that's
I
definitely
do
the
not
majority.
like to learn for the sake of learning.
Okay.
And I realized I applied that in my own life lots of times since this question was posed to me, because I realized my wife starts talking to me, my mom starts talking to me, whatever. And I realize when they're trying to tell me something that happened, I internally go, if I can't apply, I don't know why I need this information. Like did you just
take us
telling me
into
stuff.
familial discussions?
No. I'm just saying,
Okay.
but I've realized that placed me somewhere in the middle. I do need a little bit of information to get going, and then I'm actually good at learning to apply. Therefore, I can start and I can keep going as I go, and I can keep learning and I can keep applying. And that definitely was the case on my infinite banking journey. Absolutely. Yeah. I did not know nearly what I know now about infinite banking when I started.
For sure.
Not close. And for the last decade almost, I've continued learning, actually. I continue learning all the time. I mean, later today or this week and next week, like there's learning things that I have because I'm going to continue to learn, actually. And it's really been this journey that's been fun, actually, because I like learning to apply. Like, for instance, we had a few, like a month ago, right? Everybody, we were chatting about, you might have seen us if you were live here, but we were chatting about like long-term care.
Yes.
That's something new that I've learned,
It's another
and I'm
level.
excited to learn it so I can apply.
Yep.
I mean, that's my, like, I was like, oh, now I made notes. I made reminders in my phone because I was excited to learn this thing because, ooh, and then knew something new I can apply.
Yep.
Right.
Yep. I'm the same there. Okay.
So we had a couple people on the Facebook group. So Mike said
I love that.
he needs to understand the basic rules to start. Then as he goes, he'll learn the advanced moves. He says he didn't learn the finishing moves of Mortal Kombat before he started playing. I like that.
That's so funny.
Up, down, left, right, start, select, something like that, right?
Over here.
There you go. Okay, Tony said he's somewhere in the middle. He says he likes to get a basic understanding or a foundation of knowledge and then get started. After getting started, he'll still learn, do research, experiment to see if what he learned makes sense or is correct. But he says if you wait till you're an expert, you'll never start.
Yeah, I get that.
I've heard that phrase before. They call it paralysis by analysis.
Mm-hmm.
You heard that?
I have.
Okay, Jacovian says he learns best by doing. We've got Linus who said typically he wants to wait till he knows
I can see
more.
that. I can see that, Linus.
We got
Very analytical.
We got Kat that says that she likes to educate herself with the basics, ask a lot of questions, then
That's
learn
good.
from experiences, she says. So she's going to do it and figure it out as she goes. She says, however, if money's involved, she's got to make sure that she's got the capital needed so she doesn't end up in debt or lose everything that she's been working for, that sort of thing. And Landrika says that he likes to learn as he goes, unless he doesn't have the right feelings. He's feeling uneasy.
Mm-hmm.
And if that's the case, he's going to wait. But
Mhm.
if that's not the case, he's going to learn as he goes.
I like how Kat brought up the element of risk.
Yeah.
Which is important in our conversation because there isn't any in this book. I mean, you're not assuming any risk by reading a book and learning about good ideas, right? Like you're not assuming any risk to educate yourself on this idea of becoming your own banker or infinite banking. You're not assuming any risk by getting one of those policies like what Sean was describing with its guarantees. I mean, come on. So the risk isn't there, but the risk could be in our behavior. Just like if I'm in a car, you're in a car, same make, same model. I dog my car. Jonah's taking great care of his car. That's not the car's problem. That's not anything around the car's problem. It was the driver in the seat. And that's why we like having these conversations, because we want to field your questions and we want to talk about these things. So
yep,
that's just what came to me right there.
All right. I've got something else that I thought would be fun to talk about, to share. Any of you guys watch golf? Any of you guys golf folks?
No, I love my life.
You love your golf. What's wrong with golf?
They're laughing in
All
the
right.
office. I can hear him laughing in the
He
office.
got the producers
Will
laughing.
liked it.
Sean, I know you're not in golf, and we've had this conversation before. I think you've maybe never been. Is that correct?
I've actually got a little golf thing I'm going to be doing out in Orlando when I go back out there with a buddy.
Okay.
So found a course that they'll let me jack that thing up and
Okay.
figure it out as I go.
Okay, so the reason I bring this up is because earlier in the week, this week, there was the Masters tournament. Okay, so Ryan is playing golf. Ryan's saying he's saying I have my own clubs. I
Right.
think I know what that means.
That could be something different.
That means I have my own clubs. I've
In the
been on a
closet.
course before. I have I have put OT in the ground, but I don't know if I'm going to claim playing golf. That's
I like
what that means.
putt-putt.
I like putt-putt too. I actually played golf about a week ago or 2 weeks ago for a buddy's birthday. That's what he asked to
Okay.
do. He said, meet Saturday morning, let's meet at the golf course. And we played. And do you know how golf scoring works?
Low score is a good score, right?
Low score is a good score. So a typical course, the score you're shooting for is 72. Okay.
All right.
So a lower score than that, 70 or something like that, that would mean that you were under par. Very good. 72, you were even. Very good. Anything over, not very good.
I've heard of this phrase, under par.
Okay.
Birdie,
So-
bogey, eagle.
So I shot a 115 on a 72 course. So what that means is I'm not very good. But I was out there. Anyway, the reason I bring this up is because the Masters just happened. And I found this chart that I wanted to talk about because this chart highlights the prize money associated with the Masters, and I want to talk about this for a
Okay,
second. I
let's
want
see
to
it.
put it on the screen. So Jesse, I've got one that's a tad bigger for you here in office.
Mm.
Okay, so first place, if you won the Masters, $4.2 million.
Mhm.
Second
Okay.
place, 2.6. Third place, 1.4. All the way down. 25th place, 184,000. That's the bottom of that first column there. 26, 168, started the second column, all the way to the 50th placed person, $52,920. So here's my question for you guys. Let's pretend that we like golf. Let's pretend that that's what we are doing. And let's not say we won. We're not that good to win, but let's say we were good enough to get somewhere in the 30 to 50 range. Okay?
Mhm.
Meaning we weren't on TV all weekend,
Mhm.
right? We did shake a few hands, take a few pictures, but we were not the prime time. We didn't finish playing Sunday afternoon at 4 for the cameras. Like we finished playing Sunday evening at 8:20 is when our last shot was taken because we weren't winning. Does that make sense?
Yep.
But we are about to inherit $150,000, $175,000 from this golf tournament. And my question is, where are we putting it? What are we doing with it? And what are your thoughts on the golfers obtaining all this money from a tournament? Sean.
I don't know what people like that do with their money. Hopefully they've got good people in their corner teaching them what they should be doing. But you know what I'm doing? I've got family policies. I'm finding how much room I can dump in extra cash that I can run through my system before utilizing it. And then any extra cash that cannot fit in there, I am then opening a new policy with, because I need a new branch office. And I'm assuming these gentlemen don't just play once, of course. They're playing multiple tournaments a year. And if you're decent, if you're in that 30 to 50 range, you're probably winning some money every time you play, give or take.
Now, I've got to assume that if you're in the 30 place to 50th place range, this was the big one. So these are the big numbers, right? This is the Masters. These are the big numbers. I'll put them back on the screen if you want to look at them some more. These are the big ones. So I'm assuming you are playing more often. You're playing at the PGA thing, and you're playing at
You've got some overhead.
invitational thing, and you're playing at, right? Does that make sense? And I'm sure you've got a sponsor. Somebody's sponsoring you because they want you to use their clubs and wear their shoes and whatnot. Does that make sense?
Sure.
But you've got to assume that these people in the 30 to 50 range are not these multi-million-dollar folks that you might have assumed.
They're the working class of the golf.
These are the working class of the golf people. Yeah. Are they making good money? Sure. They're making $400,000, $500,000, $600,000 a year. Absolutely. Right. But it's not the people who just made 4.2 in a weekend. That's not who it is. So these folks, I mean, that's just a high paid job, right? That's the same as a doctor or a dentist or a chiropractor, right?
And they're definitely treating it like a job.
Which means, and they're definitely treating it like a job. They're practicing, they're going to the range. They've probably got the club memberships and all that stuff. They've got the coaches they're paying, maybe nutritionists because they want to stay in that range or maybe get out of that range. So you've got to assume
I heard a
these
golfer
folks,
talking about creatine. So I guess I did know something was going on about golf.
Are they taking that in golf?
Yeah.
Are you allowed to have performance enhancing drugs?
No, that's not a performance enhancing drug.
Okay.
That's just a good, holistic, naturally occurring element that we maybe don't get enough of.
All right.
I take some every day. It's great.
All right. Anyway, so that's what I'm saying. Like, hey, I thought when I looked at this prize fund breakdown, I thought that these guys were higher than this.
Gotcha.
And I started to realize, only like the top 10 guys might fall into that category of, oh, well, they've got so much money. Who knows what they're doing? But the rest of everybody, I was like, they need personal finance help.
Yeah.
They're going to have to. That's not more money than I can imagine. You know what I mean?
Right. For sure. I mean, what jumps out in my mind is, like we've heard or said to folks, it doesn't matter if you make $10 an hour or $10,000 an hour, just as an example. Most people don't keep most of that. Is the bottom line. So what does it even benefit you if you have 100,000 or $1 million or 100 million come through your hands if you don't keep any of it?
Yep.
I mean, that's the pervading thought for me right there.
I agree. Not only that, because you've got taxes coming at you, right? From something like
Then
this,
you're taxed on the money that didn't
prize
stay in your hands
fund.
anyway.
Exactly. You've got to assume that, again, this is the big tournament. You got to assume these guys are not doing as great as you thought they were doing. I'm sure they're having lots of fun playing a sport and making 200, 300, 400, but it's not actually as big as you thought. Is that, anybody get that sense? I thought it was way bigger.
Yep.
I was like, I thought this was going to be huge. And I was like, oh, this is not that big. Now, again, if you're winning the tournaments, it's humongous, right? Because again, Rory McIlroy, who just won the Masters, is playing in more than one this year.
Okay.
So he's going to be a top 5 to 10 finisher in all of them. So those are some big dollars, right? But it was funny to me. Did you guys know that Bryson DeChambeau? So I watched it this weekend, only a little bit though. But Bryson DeChambeau, who was in second for most of the weekend, he ended up 5th or something. But for most of the weekend, he was in second. Do you know that he's the most followed golfer on YouTube?
Nope.
He makes golf videos.
He does his golfing coming onto the scene. He was like I don't want to call him the Happy Gilmore, but he was whacking the crap out of that ball. They're like, this guy can drive the ball. He's big. He's jacked. He's like way different than these other dudes out here. So
and now he makes videos like with Dude Perfect and hits the balls over his house. And can I shoot blindfolded this shot and whatever? And he's got like 2 million followers on YouTube. Like that's most of what he does. And then like he shows up and he was in second for most of the weekend, and then he ended up getting 5th.
Right. Still good.
So I thought
for
that
himself.
was fun. So I was like, oh, that's so interesting that he's generating this other stream of income while he's actually a literal top 5 finishing golfer in the best tournament that, golf's got.
Yeah, that is interesting.
But of course, the point of bringing it up was, man, these folks are going to need personal finance just like the rest of us.
Absolutely.
And then that interesting. I thought it was.
Yep.
With that being said, thank you guys so much for tuning in. If you are watching, we've got lots of people watching on YouTube, on Instagram. We're normally on TikTok, but we're not on TikTok today. TikTok's got different rules over there, being owned by a different country. But we are on YouTube, we are on Facebook, we are on Instagram, and we are here to answer your questions about the infinite banking concept. You can ask us any personal finance questions you'd like, and we would be more than happy to dive into them and talk about them and answer your questions and go back and forth with you about, is it great, is it not great, what should you do, that sort of thing.
Absolutely.
And this episode so far, in the 40 minutes we've been chatting, we talked a little bit about a HELOC. We had a comment come in that someone was trying to up their credit to qualify for a HELOC. We talked a little bit about financing some cars, which is actually kind of fun. Jesse, earlier today, you told me that maybe you're purchasing a new one, right?
Yeah.
Why don't you talk about that a little bit?
Just did. Be using a policy for that, and I haven't made the video yet because life's been wide open. But yeah, we just got a vehicle that we privately financed, and we'll be paying for that with our private banking system using this infinite banking concept for this vehicle. Probably even get another one before the year's up. We'll see. So many things going on in life. So many things going on. But yeah, we know, and I've done both, right? Like I was saying earlier, I've gone to the bank, got a loan, and bought a car. I've also just saved up money and paid cash for a car before. So I've done both of those conventional routes of financing a vehicle. This time it was completely from the start, knowing what we know now, it was completely, we're building up capital in this system of policies, right? Because we own 6 of these policies so far. I'm actually in underwriting for another one right now, which is exciting, another exciting topic. But we knew we were going to get a car here soon. So we'd been building up money, compounding capital in our policies, increasing our net worth at the same time. Just so many cool factors, right? But then, yeah, we just recently pulled the trigger on this one.
I love that. We got a question from Ryan. He's asking, how can he access his equity without using his credit score?
Where's your equity?
Right.
So are you still talking about the HELOC?
So Ryan, were you the comment earlier talking about the HELOC? Are you talking about the equity in your house? Is that what you're talking about? Just want to make sure that we answer your question appropriately. Would you please let us know? Leave a comment. But if you are talking about your house, I am not sure that this is possible. Sean, go ahead.
I would, my only, depends how much you want to leverage. Depends
he says
how much
yes, he's talking about the house.
So my only thought that comes up with that is you could find somebody just like we do with our lending, our private lending that we do. You could find somebody that you're willing to put your house up as collateral, the equity in your home, and they would give you maybe a portion of that, a percentage of that, depending on how they feel that risk was weighed in their eyes. And if you were willing to, again, put your home on the line as the collateral piece, you might be able to find somebody that would give you a private loan for a certain percentage of the equity in your home and do it that way. That person's not going to check your credit. I mean, they'll want to see a bunch of other stuff just to make sure that you're good, but they understand, hey, I can't go through this route because I have low credit, but they're going to want to make sure that they're in first position. So if you default on that private loan that they gave you, they're taking your house, which they should.
Which is the
because
same,
that's how
but it's
things
the
work.
same thing that would happen at the bank. You
Yep.
default on that.
Yep.
They're-
You're just doing it privately instead of conventionally with a bank.
Yep.
Absolutely.
That's kind of the only way I think that you could potentially get through that. What I was going to say, my own example is obviously both of you know, because I post about it, is wife and I, my son just got back from a nice little trip in Italy. So we took a nice vacation that we used our policy to fund, and that was fantastic. So oftentimes people are thinking about, hey, things I'm spending money on that might potentially be costing me money in terms of interest that I'm paying to a third party. Those are the things that I should be using my policy to either pay off or help finance, so on and so forth. But I think one thing that people miss, excuse me, a lot, is financing vacations. We take a lot of vacations all the time. Most people maybe take 1, 2 a year, and they save that money up somewhere in most cases. So what we try and teach people to do is, hey, save that money in a place that's going to be earning you continuous compounding uninterrupted interest while waiting to go on your vacation. And then what we do when we actually go is we take our favorite credit card, whatever it is that we want to get our points, our miles on, whatever it may be. And that entire trip, we're in Italy, we're using that credit card. We're racking it up. We're earning those points. We're earning those points. We come back, we've totaled up how much we spent, and then we go to our policy and we take a loan. Now you may be thinking, well, if I would have just paid cash for that trip, then I wouldn't have any interest that I need to pay back to the company for loaning me cash value out of my policy. But just like Jesse mentioned earlier, what you're forgetting is the future value of your cash working for you. So if I just took the cash that I saved up in my savings account and went and spent it and paid off that credit card, well, that $2,000, $3,000, $4,000, $5,000, whatever you spend on that vacation, will never make you another dollar again in your life. But if I run it through my policy first, that money is going to be continuously earning me interest, compounding my growth, purchasing me more death benefit for the rest of my entire life. So we were able to go on this awesome trip, fund the money through our policy, use the credit card, take the policy loan, pay off the credit card. And now what we're doing is preparing for the next trip. So we've taken a certain allotment of money. We're paying back policy loans with a little bit of interest included because we're paying good banker. We want that to be bigger than what it was before. And then the next trip comes up, we'll have all that money back there again, and we'll be ready to take the next vacation.
There you go. So Ryan asked this question. I'm going to jump on this one. He's saying first said, kind of what does the infinite banking system suggest? And then secondly, he's saying, well, how can you utilize the infinite banking system? So Ryan, let me break this down for you. Infinite banking is very, very similar to exactly what you're describing in trying to get equity out of your HELOC. It's very, very similar. So let me explain. You bought this house at some point. You put a down payment down, and every single month you've got a mortgage payment. This is how people typically buy houses. Very few people out there buy houses differently. Okay. Every time you make a mortgage payment, more of the value of your house, you might have a $200,000 house or a $300,000 house or $500,000 house. But every time you make a mortgage payment, more of the value of that house is paid for. It's paid off, it's bought, whatever word you want to use, whatever you like to say. And that portion is what becomes equity. So what you're trying to do is you're trying to walk into a banking institution, a financial institution, and you're trying to say, hey, I've paid off this much of my house. I'm wondering if you, instead of just having it paid off, if you'll loan me that value. And the banking institution has rules and regulations. They're going to say, sure, but if you jump through our hoops.
Mm-hmm.
And even if you jump through our hoops, we're not giving you the whole value. We're only going to give you an 80%, 90%, whatever percentage the bank made up, because they've got the money, they make the rules, right? It's called the golden rule. Whoever's got the money makes the rules. That is what's happening with the HELOC. That's very, very similar to what's happening inside of our infinite banking policy, except a few key differences, huge differences. First thing that's similar, every time you make a premium payment, a payment into the infinite banking system, into your whole life policy, more of the total value of the policy or the death benefit, that's the total value, the big number, is bought or paid for or paid off, whatever word you'd like to use. And that bought, paid off, or paid for amount becomes the equity, or as the insurance company calls it, cash value. That's what it is. And so you're trying to go to the bank and say, hey, can I have that cash value? It's the paid off portion. I've already paid it off. What we're saying is the same. We're going to the insurance company and saying, hey, can I have that paid off portion? And instead of the banking institution saying, sure, if you jump through our hoops, the insurance company says, sure, how would you like the money? It's a very different process.
Yep.
So all of a sudden, the hoops you have to jump through at the banking institution, of the credit check, of turning in every bank statement you've ever gotten emailed to you, of turning in the work pay stubs, of turning in your tax returns the last 2 years, of getting your credit checked or getting it hit. And hopefully that's enough. If that doesn't work out, then they're going to hit you with a whole new slew of instructions, more hoops to jump through, right? Instead of doing any of that, the insurance company doesn't make you do any of that. Their question for you is, this is how much equity you've got. How much did you want again? Because it's also not some 80, 85% of the equity. It's equity. You can have the equity. You can have all of it. And then it's just, well, how would you like us to send it to you? Do you want a check in the mail, or did you want a direct deposit? No hoops to jump through, which means instead of this idea of let me get my credit up so I qualify to have my own equity,
Right.
it's just, I want my equity.
Yep.
I mean, it's a very, very different process. So like Jesse mentioned earlier, we're not saying that getting started with infinite banking all of a sudden means that I don't have a house with equity in it. We're not saying that. But your question earlier about like, how can I access equity without using your credit? Probably pretty tough. There's not a lot of financial institutions, or any maybe, that'll do that for you. And like Sean explained, maybe you can find a person that'll say, sure, I'll give you the money if you put your house as the collateral.
Let's talk about that. So when you're, and I'm not saying don't do a HELOC, do a HELOC, right? But I am saying consider this. The collateral in a HELOC is, like Sean said earlier, the house itself. If you have some unexpected financial crisis, right? Could the bank change terms on that HELOC because they don't see that you're employed now? So just so many different things can happen. But at the end of the day, the house is that collateral. Whereas now, when I took out a policy loan for the car that I just purchased, or Sean took out a policy loan for the vacation that he just went on, what's the collateral there? What's the contract that we own? So there's nothing to be pulled out from under us like our home. So again, I'm not saying don't do the HELOC, but just recognize the power of who controls the collateral in those two different relationships. That's a big point, strong point for me.
I'm glad you brought that up, Jesse. I was literally going to say the same thing. Is the only thing different there is the control factor. You could have a lot of life happen to you, and it's going to happen to you. If you can't make those payments back to the HELOC, you're also not going to have a home. If you can't make the payments back to your own personal banking system, you're going to talk to you about that and figure out a schedule when you can, because you're the one in control. You're the bank. Yep. That's why we love this so much.
As I get older, I've realized more and more, I've said it many times, or you catch me on YouTube, you'll hear me saying it. But as I get older, I value control more than I value other things. I used to, and when I first started infinite banking, I used to say, but they're giving out the money at the bank. They're giving out the car loan at 1% or 2%.
Sure.
And that's so low. How can I pass that up? I'll just use the bank's money. And as I get older, I start to realize, like, I value control more than I value those things. I just don't want to do business with the banks. I just really don't. I don't like it. The more I've used my policy and log in on my computer right here or on my phone and click a few buttons and get the money sent to me, the less and less I want to go sit in the bank. Or
Next
I want,
Thursday when the loan officer is available.
exactly.
To let you
Or the
in.
less and less I want to call them or fill out the app. Like, I just don't want to. I don't. And they ask me too many questions and they want every piece of paper I've ever been sent. I'm like, this is stupid. I'm not doing this anymore.
I had to do so much stuff for the HELOC. So much stuff. So many papers. They wanted everything. They're like, can we get your kid too?
Right.
I'm like, yeah, I'm going to keep the
But
kid.
again, you don't have to choose either, though, right? Like you could do both. You could do both. I think Ryan's asking the most pertinent question now that we know where he's at in his learning journey right now.
Yep, he sure is. So he's asking, how can he start the policy? This is awesome. Well, we're glad you think it's awesome. Lots more you can do with it. More things we can explain. But Ryan, here's what you do, my good friend. You click the link in our bio. That's what you do. If you are on YouTube, go to our profile bio. If you're on Instagram, click the link in the bio. It's bio over there, right? Bio. I guess YouTube's like link in the description.
Links everywhere.
And Instagram's link in the bio. But here's what's going to happen when you click it. When you click it, it's going to put you into our full-length presentation on Infinite Banking, so you can watch the whole thing.
Start there.
And you need to watch the whole thing. Don't skip that. And then it'll say, after you've watched the whole thing, it'll say, schedule a call. And you're going to jump on our calendar and you can get one of a real-life person, might be me even, that can walk and talk you through Infinite Banking for you. That's important. Once you watch the whole video, you'll understand, oh, okay, so I can use it like this and I can do that and I can do this. And then you want to talk to a person and say, can I really use it like this and do that? Or am I making stuff up? Or does it really work like that? And then we'll be able to say, yeah, you can. Or, oh, but consider this or do that and that sort of thing. And we'll walk and talk you through it. And if you're like, yeah, this is really good, I want to start, we'll help you start on that phone call. So it's click the link in the bio. It's watch the video. It's book a call with us. That's how we do.
That's it.
All right. It is 12:55. We've got a question coming in from Navigate Your Ventures. Would you add paid off vehicles, business income, and other assets on the cover sheet when getting started with the policy? Build the gross income or assets. Build the gross income or assets.
Yeah, I mean, you want to report as much as you can when it comes to applying for a policy. I mean, you want an accurate and a big net worth, because those are the two main things that insurance companies are going to look at: net worth or income.
Yep.
To be able to qualify for more. I mean, that's a big thing for me. Like I said, I'm in underwriting right now for another policy on myself, and I want to report, as much net worth and income as I can, because I'm trying to get as many of these policies as I can possibly get.
Yep. I got one more thing that I thought would be fun as we wrap up here. Don't need to discuss it too much, but we made this video about 2 months ago or so. Real popular. There's a couple of these groups that are doing this out and around. This video for us did about 20,000 views, which is pretty significant for just a quick, we put it together and threw it out there video. And we're thinking about bringing this back with cash value. And so I want to play it for all the people who are watching. We appreciate you tuning in, and I want to play this video for you. Are you interested in this? And we'll get your guys' take on it, and then we'll keep moving.
Jay-Do from the Banking Bros. And where will it be? Congratulations to whoever's about to win this money. We're dropping it in TR right now with our friends at Mr. and Mrs. Cash Drop, and we're still talking infinite banking. So if you want to be a part of that conversation, click the link. We'll talk to you soon. Good luck, everybody.
So here's the idea. We travel a lot for infinite banking for work. We teach people infinite banking. We go to this group or this town or this whatever. And we thought, you know what, maybe we should start using some cash value, pulling the cash value, making the videos where we stick the cash value somewhere and make the video so people can go and find it. People like that. People tune in, people watch it.
I remember that.
And we thought maybe that'll be fun. What are you guys' thoughts?
Yeah, I think that's fun. My thought is I got a call at the top of the hour right now to have one of those one-on-one consultation calls, Ryan. So when you see me dip out, just know that's That's what I'm doing, and everybody else that's been tuned in so far. We do this stuff every day. I think it's fun. I remember
it's
that
fun
video.
too.
I remember when J-Do did that one.
As
I
long
think
as
that's
J-Do's using his cash value, though,
awesome.
right?
He's got voluntold.
No, we've got some cash value we can spare, and that'll be fun. There's a couple of cool videos coming out for everyone who's paying attention and watching and paying along. We have recently hit our 10th anniversary of a few policies, and so we've paid the premiums and we've recorded the screens and so all that fun stuff, so you can see the cash increase each and every year, and that'll be fun. And we might do a little bit of a cash giveaway in coordination with some of that. So
Big mile marker, man.
yes,
Congrats.
thank you. I'm excited about it. So anyway, with that being said, we appreciate your time, your energy. Thank you guys for tuning in again. We will be back at same time, same place, and the weeks to come, and we will talk and walk you through the infinite banking concept. We really appreciate you tuning in, and we watched the video at the top of the hour. So what you should know is don't finance cars for 267 months. Peace.
You are now tuned to the banking bro. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.